Hi, I'm Jason Moser, analyst with Motley Fool One. Thanks for joining us for another edition of Ask a Fool. Today we're taking a question from Tom Skalakis. Sorry, Tom, if I mispronounce your last name. I think that's it, though. What has happened to stock splits? There was a time that stock splits were very common. Why are they so rare now? It's an interesting question, Tom. I don't actually know the numbers there to try to bear that thesis out. I'm not sure if there are fewer today than in the past, but I think it's also important for investors to note really what a stock split is and what it ultimately means. So let's look at the question here. Would you rather have one share of a $500 stock or 50 shares of a $10 stock? I mean, in theory, they're both the same, really, so it shouldn't matter. But with that said, companies will split their stocks for a number of reasons. For example, Berkshire Hathaway, not too terribly long ago, split their B shares for the purpose of an acquisition. On the other side of that, in 2011, big bank Citigroup actually reverse split their stock after the financial crisis, which resulted in their outstanding share count ballooning out of control. So essentially, the reverse split was something that reduced their number of shares outstanding and gave them a higher, and I say higher in quotes, stock price, because really it was the same. It was just higher in nominal value. But that was simply a perception thing. They were just trying to reduce that number of shares outstanding and give themselves a little bit of a higher stock price to maybe create a better perception of the bank and that things were improving. But at the end of the day, really, an investor shouldn't care about stock splits in honesty. Yes, they can definitely change the short-term perception, perhaps that the stock is now cheaper, thereby bringing more potential buyers into the market. But the fact is the company is still going to need to execute over the long term to justify its stock valuation. And that's what we really focus on here at the Motley Fool. It's that bottoms-up investing, looking at the companies, the fundamentals, their competitive advantages, and it's that focus on value versus price. Don't get the two confused, because price doesn't really have too much of an effect on things. Value is the more important point to focus on. So it's a great question. I appreciate you asking it. And for more information, make sure to check out Fool.com.